Two assets, both near their lows, both ignored by the broader market, both carrying institutional catalyst timelines that arrive before December 31st, 2026, and both sitting at prices that the community holding them finds frustrating, for reasons that are specific and documented rather than vague and sentimental. This video is not about 2030. It is not about the 5-year thesis or the cycle peak or the maximum bull case. It is about one calendar year, 2026. What does $1,000 in FLR produce by end of 2026 versus $1,000 in HBAR? And more importantly, which one has the more asymmetric risk-reward within that specific 12-month window, given what is actually documented, confirmed, and arriving before the year ends? Let me start with the honest worst case for both, because the worst case is the thing most comparison videos skip, and the thing that most investors discover after they have already deployed capital. FLR, worst case in 2026, FLR hit its all-time low of $0.00631 on July 1st, 2026. It is currently trading near that level. The analyst consensus for 2026 is described by Coinpedia as a rebuilding year. Price range $0.008 to 14 cents. If 2026 is genuinely a rebuilding year and the price ends the year at $0.008, the conservative floor, $1,000, deployed at $0.0065 today, produces $1,230 by year-end, a 23% return, positive, but against a 4.48% risk-free treasury yield. The risk premium for that outcome is 18 to 19% over 12 months. For a sub-penny token at its all-time low with a rebuilding year label from its own analyst coverage, that risk premium is thin. The worst case does not mean zero. It means the mechanism, FXRP adoption, driving FLR collateral. Demand is real but slower than the most optimistic holders anticipate. It means FLR confidential compute deployed successfully on Songbird in July 2026, but the translation from Canary Network to mainnet to institutional adoption takes longer than this calendar year. It means the $1 billion FXRP target that Hugo Fillion described is a 2028 or 2029 story, not a 2026 story. HBAR worst case in 2026. 7 cents is already near a 365-day low. The broader downtrend that analysts describe, multiple resistance layers above current price, RSI at 47.96, signaling mild positive momentum but not breakout momentum, suggests that if the broader crypto market weakens through Bank of America's September, October, December rate hike scenario, BAR trades sideways to lower through the end of 2026. The Binance Research average projection of $0.218 for the year implies the average is significantly above current levels, which means either the price recovers substantially from here, or the year-end price is lower than the average, because the earlier months were much higher. At the conservative end for year-end 2026, if the DTCC October full commercial launch does not produce visible HBAR demand, and the ETF approvals do not arrive, $1,000 at 7 cents ends the year at approximately the same level, flat, against the opportunity cost of everything else that money could have done in 2026. The worst case for both assets is the same structural condition. The catalysts are real, but the timeline is longer than the calendar year. Now, the documented catalysts arriving before December 31st, 2026, and I want to be specific about each one, because the worst case only matters if you know what has to not happen for it to materialize. For HBAR, the DTCC October 2026 full commercial launch, Project Tyro was physically in the room at the July 15th live production trades. The October launch expands the DTCC's tokenization service from 40 firms to its full 100+ member firm participant base. Every firm that completes the October integration gains experience with blockchain-native settlement infrastructure. Every firm that evaluates its next network integration after Stellar, documented for first half 2027, has Project Tyro's presence at the July trades as the most specific documented connection between HBAR's ecosystem and the DTCC's production. Infrastructure. The October launch does not directly put HBR in the DTCC's confirmed integration. It confirms the institutional legitimacy of the category that HBR's codebase steward is already inside. The 15 pending ETF filings, at least one or two additional HBAR ETF approvals arriving before year-end, would represent a new regulated capital access channel that the Canary Capital product alone cannot provide. The SEC's regulatory environment under the current administration, which produced the March 2026 Joint Digital Commodity Classification for HBR alongside Bitcoin and Ethereum, is the most favorable for ETF approvals that has existed since. HBAR's inception, 15 filings in that environment before year-end, suggests a non-trivial probability of at least one additional approval. Robinhood's tokenized stock rollout spotlighting HBAR's enterprise infrastructure for compliant asset. Tokenization, as of July 26, 2026, this is the most recent catalyst. Robinhood, with approximately 24 million funded accounts, is exploring tokenized stocks. If HBAR's enterprise infrastructure for compliant asset tokenization enters the Robinhood conversation at any point before year-end, the retail access to HBAR's institutional thesis changes dramatically, and Binance Research's average 2026 price projection of 0.218, that is the average, not the peak. If the average for the full year is $0.218 and the current price is 7 cents, the price appreciation required to reach that average from here by year-end is over 200%, even accounting for the earlier months when the price was higher. For FLR, FLR Confidential Compute deployed to Songbird, the governance vote STP-13 passed on July 12, 2026. The deployment to Songbird, the Canary Network, is confirmed. FCC introduces trusted execution environments and protocol-managed wallets. The programmable smart contract layer for XRP ledger assets that keeps verification on FLR. This is the first delivery of FLR 2.0 architecture. If the Songbird deployment is successful and the mainnet deployment follows within the 2026 window, the institutional DeFi use case that FCC enables, banks and hedge funds running private compliant computation on XRP assets becomes accessible for the first time. HBAR's FLR native exchange-traded product launched June 8, 2026 on a traditional exchange, giving traditional investors regulated exposure to FLR. The ETP provides a new institutional access channel that did not exist before June. Every investor who accesses FLR through HBAR's regulated product creates demand that goes through the traditional financial infrastructure rather than through a crypto exchange. That's a different buyer profile, with a different holding behavior and a different sensitivity to short-term price volatility. FXRP approaching the 200 million mark, with approximately 80% deployed in live DeFi protocols. The path from $200 million to the $1 billion FXRP target requires 490% additional minting from current levels. At the collateral mechanics we calculated in the FLR math video, each dollar of FXRP requires FLR collateral at a 200% pool collateral ratio. Significant FXRP minting acceleration in the second half of 2026 creates structural FLR demand that is mechanical rather than speculative. Now the gains per dollar frame, $1,000 in each asset. The bull scenario only for 2026. What does the documented catalyst timeline produce? $1,000 in FLR at $0.0065 buys approximately 153,846. FLR bull scenario for FLR by end of 2026. The Coinpedia bull range extends to 3 cents. Multiple analyst platforms place the 2026 high between 25 cents and 3 cents, contingent on FCC mainnet deployment, FXRP minting acceleration, and broader crypto market conditions. Using 25 cents as the conservative bull case for 2026 specifically, achievable if FCC deploys to mainnet, following the successful Songbird Canary Network deployment and FXRP minting accelerates through the second half of the year. $153,846 FLR at 25 cents equals $3,846 from $1,000, a 2.84x return, $2,846 in gains from $1,000, deployed at $0.0065, using 3 cents as the full bull scenario for 2026. $153,846. FLR at 3 cents equals $4,615 from $1,000. A 3.6 ounce return. $3,615 in gains. $1,000 in HBAR at 7 cents buys approximately 14,286 HBAR. Bull scenario for HBAR by end of 2026. Research's average 2026 price projection of $0.218 is the most specific, institutionally sourced price projection for HBAR within this calendar year that I can verify. The average implies the end-of-year price is at or above the average, meaning the year-end bull scenario for 2026 sets at $0.218 at minimum, and potentially higher if the October DTCC launch and ETF approvals arrive in the second half. Using 25 cents as the bull scenario for year-end 2026. Achievable if DTCC October launch produces visible institutional awareness with HBR, at least one additional ETF approval arrives, and the Robinhood tokenized stock conversation includes HBR's enterprise infrastructure. $14,286 HBR at 25 cents equals $3,571 from $1,000, a 2.57x return. $2,571 in gains. Using Binance Research's $0.218 as the base bull scenario for 2026. $14,286 HBR at $0.218 equals $3,114 from $1,000. A 2.1 Onyx return. $2,114 in gains. The gains per dollar comparison for 2026 specifically. Conservative bull FLR 25 cents produces 2.84x from $1,000 versus HBAR $2.218, producing 2.1 on X. FLR wins by 35% more returns per $1,000 in the conservative bull scenario. Full bull FLR 3 cents produces 3.6 on X versus HBAR 25 cents producing 2.57x. FLR wins by 40% more returns per $1,000 in the full bull scenario. But here's the context that makes those numbers genuinely useful rather than misleading. The FLR bull scenario requires FCC mainnet deployment within 2026 and FXRP minting acceleration in the second half of the year. Both are on the documented timeline, but neither is confirmed for within this calendar year. The Songbird Canary deployment passed governance on July 12th. Mainnet deployment follows Canary, and the timeline from Songbird to mainnet is typically months, not weeks. Whether that lands inside 2026 or slips into 2027 is the specific uncertainty that the FLR bull scenario carries. The HBAR bull scenario requires the October DTCC full commercial launch to produce visible institutional awareness and at least one additional ETF approval. Both are on the documented timeline. The DTCC October launch is confirmed by the DTCC itself. The 15 pending ETF filings in a favorable regulatory environment represent a non-trivial probability of at least one approval. Before year-end, the HBR bull scenario has more confirmed calendar year events in its favor than the FLR bull scenario does. This is the asymmetric risk-reward comparison that the worst case and bull case together produce. FLR offers higher returns per dollar in the bull scenario, 3.6 on X versus 2.57x. But the bull scenario depends on a catalyst sequence that may or may not land inside 2026. HBR offers lower returns per dollar in the bull scenario, 2.57x versus 3.6 on X. But the bull scenario depends on catalysts that are already confirmed for within this calendar year. The DTCC October launch is confirmed. The ETF filing pipeline is live. The Robinhood tokenized stock spotlight is already documented. The asymmetric risk-reward choice between these two assets in 2026 is not which one has higher upside in the maximum scenario. It is which one has the more reliable connection between its documented catalyst timeline and its bull scenario within the specific window of this calendar year. And here is the worst case comparison that completes the picture. FLR, worst case for 2026, rebuilding year. $0.008. $1,000 produces $1,230, a 23% return. HBAR, worst case for 2026, flat year. 7 cents, $1,000 produces approximately $1,000, zero return. The worst case for FLR is better than the worst case for HBAR in nominal return terms within 2026, because FLR is at its all-time low, and even a modest recovery toward the 0.008 rebuilding floor produces a positive nominal return. HBR 7 cents is near its year low, but not its all-time low, and a flat or slight decline produces zero or negative returns from current levels. So here's the complete picture. FLR wins on returns per dollar in the bull scenario. But the bull scenario depends on a catalyst sequence that may or may not land inside 2026. FLR also wins on worst case nominal return because it is at its absolute floor, and any recovery is additive. HBAR produces lower bull scenario returns per dollar, but its bull scenario catalysts are more specifically confirmed for within this calendar year. And HBAR's worst case is flat rather than positive, because it is not at its all-time low. The answer to the title question, which gives you more money in 2026, is FLR if the FXRP and FCC timelines land inside the calendar year, HBAR if you are awaiting confirmed calendar year catalysts over maximum potential upside. That is not a hedge. That is the specific documented condition that determines the answer. This video is for educational and informational purposes only. Nothing here constitutes financial, legal, or investment advice. Always do your own research and consult qualified professionals before making any financial decisions. If this video gave you the specific gains per dollar comparison for 2026, not the 5-year thesis, not the maximum bull case, the documented calendar year catalyst comparison, please smash that like button, because the people making allocation decisions between FLR and HBAR right now deserve to see the catalyst timeline alongside the returns comparison. The like puts this in front of them. Subscribe, because this channel runs the specific year comparison rather than defaulting to the 10-year thesis. Both assets are near their lows. Both have documented catalysts arriving before year end. The question of which produces more money in 2026 has a specific conditional answer. That is what this channel delivers. Here's the question I want in the comments. Straight answer required. Before the end of 2026, are you adding to FLR, adding to HBAR, or adding to both? And name the one specific catalyst from this video that determined your answer. Not the community, not the chart, the specific documented event arriving before December 31st that makes your chosen asset the allocation you are backing for this calendar year. Have a great day. If you enjoyed this video, don't forget to like, subscribe to the channel, and be sure to join my free Telegram community with the link on my channel where I post my daily crypto experience and arbitrage opportunities you can't get anywhere else. This is XRP, Hobart signing off.